Did you know that 34% of entrepreneurs have zero retirement savings plan for themselves? That statistic is scary, but not entirely surprising. It can be easy when you run a business to put things like saving for retirement on the back burner because, frankly, you're busy. You're trying to grow this business and you're working in it. But the idea of working on it and working on your personal finances can not only be daunting, but an easy thing to procrastinate for far too long. That is why in today's episode, we are sitting down to talk with the co-founders of Ocho. Ocho Wealth is a new startup that focuses on supporting entrepreneurs in helping to turn business income today into generational wealth tomorrow. Two of Ocho's co-founders, Ankur Nagpal and Jess Catorc, sit down with me today to talk more about why independents struggle with saving for retirement, how we can reframe our mindset around creating wealth, and give you some tactical tools that you can implement today, especially if you are somebody that is in that 1/3 of business owners who doesn't have a retirement savings plan. The Independent Business Podcast is powered by HoneyBook, the all-in-one platform for anyone with clients. Book clients, manage projects, and get paid faster, all with HoneyBook. You can use the code PODCAST to get 20% off your first year as a brand new member and let business flow your way. Ankur, Jess, thank you so much for joining me. I am so excited to have this conversation.
Thank you. Thanks for having us. Looking forward to this.
Yeah, super excited for this. It's going to be fun.
Awesome. All right. It is going to be fun. I am jumping in with not quite a softball. I don't know. Maybe it's a softball, but I need to know, does money buy happiness? And if not, what do you believe that it buys?
So I'll take the first one. I think money can buy happiness like indirectly, and I'll give you an example. So I think a lot of people, they make a bunch of money and then they're like, wow, I actually feel exactly the same, and they sort of get into this trap where they feel like money did not directly buy happiness. For me, money was able to buy happiness by buying freedom. Like I was able to not do the things that were stressing me out, and that in turn made me happy. So I'll give you an example. Like towards the end of running Teachable the last couple of years, I was very burnt out. I didn't feel like the work I was doing was making me happy, and being able to step away from that because of having money made me happy. Or like spending money to have time to see my families. There's all these roundabout ways I think money can truly make you happy, but it's likely not by, buying more shit or whatever.
Yeah. It's not the money itself is what it sounds like. Yeah. Jess, do you agree with that?
I agree. But I think it's also like people forget about lifestyle creep, because I think that everyone has like a number where they're like, okay, maybe money doesn't buy happiness, but it certainly will take the stress off if I have X amount, if I make this amount of money in my business, or I earn this amount of money. And then you get there, but then there's more problems that come because now you're comfortable, but you uncover other things that, are stressful. And so I think that it's also just important to recognize that like there's always going to be something else. And then just getting to the core of like to what you're saying, Ankur, like, if you have money, you can travel to visit your family more. They can come to you, which I think at its root, that causes happiness. It's not necessarily the money directly.
And all of this obviously is true if like you're past a certain point. I mean, what's the having money isn't everything, not having it is, like, right? Like, so if you're at a point where like not having money is causing like stress in your life, getting past that will absolutely make a big difference.
The reason I start with that question is because it is one of the most commonly asked questions in regards to money. And as someone that's run an independent business, multiple of them over the past decade and a half, I have always been shocked that oftentimes it's questions like that we talk about, and that's where it ends. That's where the conversations around money end for a lot of us. Now, as you grow in business, you sit at different tables, and at different tables, we have different conversations, which is part of why I started this podcast, to bring those conversations a little more into the open. But one thing that I feel is starting to change, and I know that both of you and Ocho is contributing to this, is a wider conversation around money, around wealth, around how to generate it. And so I want to kind of take us from the common ubiquitous question into the double clicking of why is that? Why don't we talk about money? Have you experienced that? Is that something you've come up against in working with, independents, both at your time at Teachable, now at Ocho? Do you see this as something that's common? And if so, why do you think it is?
Yeah, I think it's such an interesting question. I think that it goes to, if you think back to when you were a kid or when you're growing up, I think for most people, the things that we don't talk about are politics, money, religion, right? Like there's just certain things that just generally people are like, oof, like be careful talking about that. And I think the problem with that and not being able to see like the nuance within like talking about money is that then we get older and, you know, when we're in high school or college, we're not really talking about money. We're spending or racking up credit card debt. And we just assume that everyone else is either doing the same thing or we just assume that, you know, it'll work itself out. And then you get to entrepreneurship and everyone's focused on making money because I think that is, for whatever reason, the metric that we determine as success. How much revenue did you generate in your business? And then no one wants to talk about the like, oh, well, I don't actually really know how to allocate my money, or I don't really know how to budget. I haven't really even thought about retirement. And then we kind of go back to that old phase where we're like, everyone else probably knows what they're doing, so I'm not going to be the one to say that I don't. At least from my perspective, I think is what I see.
Yeah. I also think a lot of these beliefs, we just internalize what our family does without really thinking about it for a long time. Like my parents are Indian, and like in Indian culture, it's pretty crude to talk about money. And for a long time, I did not, because like I was like, okay, you know, I'll just do what my family does. And then as I started to form my own opinions, I was like, actually, when you talk about it, it's empowering, right? The more you talk about it, the more people can even find out what's happening and how they stack up and all of that. So right now at this point, we have different beliefs. Like my parents would never talk, like in their friend group, no one has ever talked about how much they make, how they invest, any of it. It's just considered like a taboo topic. But, you know, I think for our generation and the people I know, things are changing. But by default, I think we just sort of do what our family did without questioning it.
Yeah, that was similar in my house as well. We didn't talk about money. I was raised by a single mom, and often if we did talk about it, it was from a standpoint of budgeting and how to get more of it. And not that it was ever rooted in a scarcity mindset, but I do think there was a lot of fear that I experienced kind of at different points in my upbringing around money. And I know I'm not alone in that. A lot of business owners come from backgrounds like that, where they enter the business world where, you know, even just operating your own company requires a lot of financial knowledge that isn't readily available for so many, or at least in the past it hasn't been. And that's part of why when I hear statistics like the fact that 40% of independent business owners, entrepreneurs, they're not confident that they're going to be able to retire by retirement age, 40%. And that stats from SCORE, you know, it's very scary, but it's not shocking. It's not surprising, because I think, you know, there is such a knowledge gap and such an opportunity, right? At least, especially I would hope in your eyes, as you're creating something so valuable for independents that are in that position to change the trajectory of their savings, of their life, of their retirement that awaits them. But I'd love to know, you know, with that stat in mind, what do you think, you know, is holding business owners back from saving for retirement, from creating that type of generational wealth that we all desire to see for those in our community?
Or take that, Jess?
Yes, going back and forth. So I think we need to like break it up into a couple of buckets, because like I think the first hurdle of like why people don't feel like they're ready for or they don't think they'll be ready for retirement. I think on one hand, there's a lot of focus when you become an entrepreneur. It's like, I'm doing this because I want to do what I love. And part of that, you know, subconsciously is they're like, okay, well, you know, when you're working a 9-to-5 job that you do not like, you're like, I cannot wait to retire. The focus is on retirement. And then you start doing things that you love and you're like, oh, this is great. You know, I'm living in the moment. Even if you're stressed, it's still like you want to be doing this. So I think there's potentially that mindset element of like not like thinking more in the present of making money, generating revenue, doing what you love, and not like, what will this look like if you do want to take a step back, or just create that safety net. And then the other thing too is I think there's just also, you know, when we talk about having access to knowledge and information when it comes to finances, if you don't understand how things work, it can feel incredibly overwhelming. And I think in the last 50 years, there's been like 150,000 words added to the tax code. So it's already just such a daunting task. I know, such a daunting task that I think it's so easy to procrastinate and feel like I'm not doing this. I'm just kind of pushing this off until I can learn everything, rather than just taking one initial step, which is, well, how can I at least budget so I have some money to put wherever I decide to put that for retirement.
I also think there's a bigger retirement problem in this country. Like, yes, we can talk about business owners, but I think in general, like retirement is it's pretty scary, and it's totally broken in this country. Like, I think for a long time, like, the government has sort of just passed the buck to the employer, bigger picture. And even now, every 2 or 3 years, they realize that like Social Security is in a really bad state. 401ks and stuff are not getting contributed enough to. Like, as recently as, December 30th, Biden signed the Secure Act 2. And my guess is they'll keep having newer and newer legislation as they realize that like our generation specifically and onward, like, is in a really broken position for retirement because of the onus that has been passed on to companies, right? Back in the day, you had pension plans. There was a much more robust infrastructure around it. Not anymore. And obviously exacerbated if you don't have an employer or you become your own employer, which is, where we come in. But I mean, this is kind of depressing, but I think it's messed up for everyone and pretty systemically, and not just business owners.
I agree 100%. Absolutely agree 100%. And the lack of infrastructure is something that we talk about a lot, or that dependence on the employer to kind of support the individual. And once you go independent, you don't have, right, that existing infrastructure, whether it's good or not. It disappears. Now, with that in mind, where does someone begin? So if you are an independent business owner, let's say you are either in the 34% that, doesn't have a retirement savings plan, or maybe you do, but you're in the 40% that isn't sure it will, enable you to retire. What are you supposed to do? Where do you begin?
I can take this one. I think it depends on sort of where you are and what is sort of the best account for you based on what your income level is. So I think if you're just starting out, if you don't have, if you're not making, if you're in a lower tax bracket, it may be beneficial to think about an IRA where you don't have to get it. Like our core product is a solo 401k, so this is not even self-serving. Like, I think if you're, an IRA has a limit of $6,500, which if you're going to stay under that, it's the easiest type of account to set up. It's portable. You can take it anywhere you want. If you're under $150,000 a year, you can also make it as a Roth contribution. And if you're not served by any other retirement plan, you get a tax deduction for it if you set up a traditional IRA. A mistake I've actually seen people make is setting up a solo 401k, which is what we offer, and which is sort of the best retirement plan if you want to go beyond that amount. But setting a solo 401k up can preclude you from getting a deduction on setting up an IRA. So it's something that we want to also highlight to people to be careful and know how much they want to contribute. Because if you want to contribute $6,500 a year or less, you're probably better off setting up an IRA. But once you want to go beyond that, a solo 401k is the best type of account for an independent business owner because you can get up to a $66,000 tax deduction this year. You can make Roth contributions. Unlike a traditional corporate 401k, you can invest it in any asset you want. And the best part is, of course, it keeps compounding tax free. So it's really, there's not many things in the tax code that, in my opinion, are like a gift from the government and like built specifically, to benefit you. So we've been doing a lot of education around, how people could be leaving money on the table by not pre-funding, their benefits.
Yeah. I think just to add on to that too, I know like people are like, okay, well then how, like, where do I find this money to contribute? And obviously it depends on like what your revenue is and how much you're making. But I cannot stress / encourage people enough to actually take the time to do a financial forecast. I think when people hear, I think we need to come up with a better name than a financial forecast, because that just seems like just the most boring, daunting thing. But really it's just mapping out what you're doing now and what you will probably be doing the next 12 months or, however much you want to go in the future. Because I think people, and this isn't, going back, this isn't just entrepreneurs, people, W-2 employees also don't prioritize paying themselves first. And I think if you have bills within your business, you're paying them most likely or hopefully. And so I think allocating a certain amount of money for your retirement and for your savings, whether that's in your salary or how you want to budget that, because if you don't map out what your business is going to look like over the next few months, we can fall into the trap of, maybe it's like seasonality. There's certain seasons of the year, especially if you're like a photographer, maybe you have certain products where you're like, wow, business is great. Okay, I can contribute or I can pay myself more this month. And then it goes down and then you're panicking and then you're just like, okay, I'm not going to do anything. And so just really understanding what does your business look like month over month for an entire year on average will allow you to just be able to be more consistent and regular with allocating money for retirement.
Oh, I love that. And the word forecast as a creative, it already makes me go, ooh, but I completely agree. And we've seen similar things with just supporting business owners on mapping their client flow, for example, taking that moment to work on the business, not just in the business, to really kind of put on the CEO hat, or the COO or the CFO in this case hat, and, look into the future. It's so critical. It's so important. I'm curious though, how much is enough? How much is enough to really support somebody into retirement? Is it a percentage of their income? Is it a certain benchmark by a certain age? How should we be thinking about it?
I think the best practice is, because I think if we were to say you should be saving 20% of your income, every month, putting that towards retirement, it's easy to hear that and be like, cool, well, that's not possible, so I'm not going to do anything. And I mean, just really thinking about the power of compound interest, it's consistency is going to be your friend over just doing bursts of random large deposits when you can. And so I think, just creating a habit, what is the least amount that you can allocate towards retirement, and can you do that for the next 6 to 12 months? And if you find that month 3, it's actually quite easy, okay, I'll increase it a little bit, but you never go beyond or below that amount that you set, because otherwise people will just wait or push it off until they can, and then that's in the long term not helpful.
Another realization we've had it's something or at least I've changed my mind on since starting this company is I thought financial planners were something we could kind of replace, but I've come around to that thinking I don't think we're going to replace financial planners, because there's so much individual stuff to think about. For instance, as you bring it up, one of the big questions is what kind of lifestyle do people want to maintain in retirement is such a big variable, right? We can't prescribe the same one size fits all. So we're adapting our product and technology to also now be okay, we actually might have to do some personalization, because this one size fits all approach isn't for everyone. And which is why sometimes, having a planner or someone to talk to can help, because everyone's situation is unique, and what they want from retirement is unique, and accordingly, have very different philosophies. I was reading this book, I don't know if you've read it, it's called Die With Nothing, and it's a more extreme perspective, but here the person argues you should actually front load your spending. Too many people die with too much money because of this fear of running out, and your utility from money goes lower and lower the older you get. So the average person ends up saving too much for retirement, and it comes from a place of fear. I personally don't agree with that, but it just shows a sort of spectrum of viewpoints when it comes to how much to save for retirement.
I love that last tidbit right there. I also, as you were talking, kept thinking about my partner and I, my husband, even within, we have had to have those conversations about retirement lifestyle. And it's funny, we have such different views. So working on the compromise where I'm I want to live in an RV down by the river, give me an Airstream and I will, and whereas he's no, it has a different vision. So even just it's something, that's a good place to start for anyone listening to this. Have you really thought about it? Have you taken the time to think about the lifestyle that you want in that season of your life?
Yeah.
Yeah, absolutely. That's amazing. Okay. One of the things I love that I've seen both of you do on social and in your content is you talk a lot about sort of these underutilized, financial tips, tricks, tax savings opportunities, things that people just don't know that they, we talked about, it's not spoken about, or, there's just not a lot of awareness around. And so I'm curious if you're willing to share any of those with us. What are some of those underutilized aspects of generating wealth, creating wealth, saving on your taxes that you wish more people knew?
Oh, I mean, do you got 2 hours? We can talk about this.
Just go through a webinar right now. 7 simple steps.
But this is such a great question and topic. I love it. It's so interesting because I think most people assume that these huge strategies and tricks and everything that, maybe we'll share now or that you'll uncover, it's okay, well, they're usually tax loopholes. All these tricks, they're just there's shady things, or it's only for the rich and the elites to do. And the sad thing, with basically, what we'll be sharing now is this is pretty standard. It's not hidden. It's just that if you don't have access to this information, it's not even on your radar, which I think is one, understandable, but two, also empowering to know that there's so much that you can utilize and you can leverage. You just need to hear about it. I would say like just starting like foundationally, the first thing is just really looking at your expenses as a business owner. A lot of people, most people will, they'll claim expenses on their taxes. That's, I think for the most part, people understand that. But we often forget that, especially if you work from home, there's so much that you would be paying for out of pocket anyways that you can leverage. If you think of, if you're, let's say, living in like a 2-bedroom apartment, if you have one, like this room right here, this is a 2nd bedroom, we use it as an office. That, for the proportional square footage, of course, you can't claim all of your rent, but that can come off your taxes. So let's say if you're, spending, let's say $5,000 a month on rent, if you live in New York, that's also very believable. And you've got 1 bedroom, 20% of the entire space, that's about like $12,000 a year that you can take off your taxes, your internet, your utilities, your rent, like all those things. Highly recommend people looking at what they're currently paying for out of pocket and seeing like what is in fact a business expense. And then, there's more like even like leveraging credit card points, which we can talk about in a sec, but and even switching to an S Corp if you want to talk about that too, Ankur.
Yeah. Very quickly, the quick checklist to tell everyone to like think through is incorporation. Are you incorporated in the most intelligent way, which for like, let's say you're a startup founder, you want to be set up as a C Corp because you pay no taxes if you sell your business after 5 years. But if you're a service provider that makes over $100,000, you probably want to file for an S Corp election. So incorporation is the first place we look. 2, expenses, which Jess already spoke about. The third big category is you can fund the benefits you want. So solo 401k, retirement account, health insurance. You can literally pick the best benefits for you, your family, your partners, because it's your business and you get to control that. If you want to start getting fancy, and like this is the point at which it gets like advanced, but like people really want to like do dramatically different things to pay less in taxes, I think the world of real estate opens up a ton of different opportunities. But that's more of an advanced tactic. And I also think it's very important to figure out what is the return on hassle or return on how painful some of these things are, because you can go deeper and deeper and deeper and dig yourself, save marginally and marginally more amounts. But again, a lot of this also comes to like, what are you optimizing for? How important is like how painful your life becomes versus like marginal tax savings? But that's the quick checklist.
And just to also add on to, sorry.
No, keep going.
I was going to say, just to also clarify for incorporation structure, and this is, most people, if you're just kind of, starting out, or maybe you haven't like looked over the past few years of kind of how you're running your business, what your income looks like, just the standard incorporation structure, people will be either a sole prop or an LLC. And, that's great. However, if you are listening to this and you're making about, let's say like between $80,000 to $100,000 a year or more, a lot of the times, most of the times, it actually is more advantageous to switch and be taxed as an S Corp. You save on self-employment taxes. So it's not applicable to everyone, but also just a really helpful tip to remember that if you are an LLC or you are a sole prop and your business is doing well, once you get into that threshold, that's where you can save. I mean, if you're making $100,000, depending on what you pay yourself as a salary, you can save, thousands of dollars with that tip alone. And then, the credit card points thing, I think, is like kind of getting into the weeds, but it's something that I've recently like fully leveraged after talking to experts. And you like really can, if you have expenses that you're paying for anyways with a credit card, especially for your business, you can start to leverage and maximize how many points you're earning, which in itself can then turn into like free flights, upgrading flights, which is just a huge, huge saving. But that could be a whole other conversation.
I love the credit card points conversation, though. That's something that, speaking of like mindset shifts and transforming the way that we think about money, my husband has always been the points guy in our house, and I've always run the other way from credit cards in general. They've scared me until recently, until I started to realize, with the proper amount of, financial education and consistent diligence in ensuring that we're really taking advantage of the cards that we have, we've started flying business class on points, not paying out of pocket, but on points. And so I do think that's a really interesting avenue that for a lot of business owners, again, if it wasn't something that was discussed growing up, if credit cards were something that, were shied away from or demonized in some way, it might feel like very unfamiliar territory for them. So I do love having that conversation. I love getting a little bit into the weeds on it. I think it's something that, we shouldn't be afraid to explore, and something that really can have a lot of benefits. So if you have anything specific that you've learned that surprised you on that front, like I'm even curious, with a business credit card, can you use those points personally? Like how does that even work?
Yep.
Oh, Natalie, there's so much
Tell
we could
me
talk
everything.
about. But yeah, Ankur, if you want to get that one.
I was saying it is basically, because it's in this weird tax gray area, it's sort of an untaxed benefit to you. So you can spend money on your business credit card, earn points, use that personally. And because it's, again, the IRS has said they'll look into it, right? It's not that this will be like totally fine forever, but for now it's fit into this like nice little gray area where you absolutely can. And we know of business owners, especially people in like running a construction business, buying millions of dollars of materials, putting that all through their credit card. Or let's say you have an online course business, but you're spending huge amounts on Facebook ads. Same thing, put it all on the credit cards, have the points and use it for personal expenses, which is what I was doing. Now that we're a startup, it's a little bit different because we have investors and stuff. So in those cases, we're just opting for cash back. But if it's your own business where there's no other stakeholders, big fan of, using the credit card points for personal use.
And then just to kind of break it down. So, when it comes to credit card points, the first thing is I think people think that you need to obsess over loopholes. Like I know people that like love reading the fine print to find, I know someone who actually had their credit card, they were banned from this credit card company because they found a loophole that basically
I know
just...
you're talking about.
Yeah. So like there's extremes, but what I would say is, so the first thing to maximize how many points you can get. And again, cannot stress this enough. You need to ensure that you do have, a relatively good credit score. You need to trust that you will be able to pay off the debt. Do not pay the minimums, pay it off every month, because the benefits that you're going to be getting, like with interest and compound interest, it doesn't make sense. But the first thing is, the way to get the most amount of points in a short amount of time is one, looking at sign-up bonuses. So many credit cards will have 100,000, 60,000 sign-up bonus points. But also looking at analyzing your spending. So if you're looking for a business credit card and you're spending a ton of money on ads, there are specific business credit cards that give you multiple points for ad spend. Don't just go for the Amex Platinum because everyone has it. Actually look at what is my spending, what are some of the biggest categories, and which credit cards are actually going to give me more for that. And then on the note of, sorry, I'm going to you can cut this in half if it's too long. But with the sign up bonuses too, there's a thing called pathing. So to get a sign up bonus with credit cards, most of the time there's a certain amount of money you have to spend within a certain amount of time. So don't sign up for 5 credit cards and you're like, oh my gosh, I'm going to make 500K in points if you have to spend more than you actually financially can in 3 months. So the strategy is called pathing, where you start with one credit card, you leverage those, the sign-up bonuses, and then you can go on to another one. Usually you start with a Chase card and then Amex at the end, but that's a really great place to start. And then, transferring your points out to partner programs.
Oof. I love that. I love all of that. I like getting into the weeds. We're not cutting it in half. We're going to have everyone re-listen to it twice and execute on it immediately. I want to double click into the solo 401k. I had never heard of this until y'all launched. Mm-hmm. And I've been running businesses for a very long time, well over a decade. And I'm not embarrassed to say that because I'm learning more every single day. But I guarantee there are a lot of folks out there that don't even know this exists. So for a second, can we just talk about what is this? What is it? Has it always been around? Is it something new? Any information you can share on how we should be thinking about it?
Yeah, absolutely. I had the exact same journey when for the first time at an LLC a couple of years ago. So I was looking into retirement accounts and I Googled it and I stumbled upon the solo 401k. And solo 401k works like a corporate 401k, but the big difference is you are both the employer and the employee. So you can custom build your own 401k plan to do exactly what you want it to do. When I started reading about the plan, my first reaction was, this sounds too good to be true. Like it's got sort of the best parts of all the plans. Like why, like what's going on here? Why isn't everyone talking about this? And then I went down a journey of actually setting one up. And then I started to realize why no one was talking about it. It's because all the providers were sort of terrible. Even though you are allowed to do all these things, like for instance, invest in, any asset class, whether it's stocks, real estate, funds, no matter what, and have full discretion over that, most providers actually weren't allowing you to do that. So if you go to Charles Schwab, you could set up a solo 401k. It would take a lot of time, but you'd be limited to what Charles Schwab allows you to do, and they wouldn't let you have the benefits like having a Roth account under your solo 401k. So none of the providers honestly focused on it too much, and my hypothesis is because they thought it's a very niche product. They thought how many people are out there, and for a long time, there really weren't that many independent business owners to make it make sense. But as that changed, we realized it was a really interesting wedge for us to enter the market, and initially built a product literally because I couldn't find one for myself last year. I tried, and 6 months in, I'm like, oh damn it, guess we got to start a company now. And yeah, that's where we're now, where I think it's the best retirement account for someone self-employed because it gives you the highest contribution limits. Your money compounds tax-free. You invest in anything. You can make Roth contributions. And it's even got good like downside protections. Like for instance, let's say you end up needing your retirement money for other reasons. You can borrow up to $50,000 from your own solo 401k at no interest, no penalty, nothing, and pay it back later. So it's a very, very flexible account.
Yeah. Ooh, I love that. Jess, anything to add there?
Yeah, the one thing too, just the caveat is, we've had people like, okay, great, I'm going to set up a solo 401k. I've got all of my like 5 full-time employees. A solo 401k is if you are like, you don't have employees, full-time employees under you. I think the difference, it doesn't count if it's your spouse or your partner. But if you have full-time employees, then it's not the right fit. But yeah, no, I think it's either way, it's just definitely worth looking into. Or if you know someone that is self-employed and doesn't have any employees, like send them this or just send them all the resources because it is such a game changer.
Whew, I love it. I wish I knew about it. I wish y'all had existed when I was the solo with no full-time employees under me, because back then I was so young and had no idea what to do. All right, and the world is changing for the better, and with all that you're building at Ocho, you're making it easier for business owners to create that generational wealth. As we wrap up this episode, I love to end with a final question, and I would love to get an answer from both of you. This is a podcast all about the science of self-made success, and so I'm very curious what you believe differentiates the businesses that succeed from the ones that fail.
Ooh. Avoiding the like mindset, because I do think there's a huge aspect that is mindset of like obviously believing in yourself and like actually putting yourself out there, because I think that's probably a common thing that people will think or maybe assume. I do think though one of the most important things that I have seen both from creators and startups is one, being able to listen and pivot, because you can have the best idea, but even if the demand was there, but it's shifted, or if there's like a more nuanced approach that you could take for a problem or a pain point that people have. I mean, even if you just look at, like, we could talk about personal finance, or is it personal finance for business owners? Like, there's so many things that you can do, but I think that you just have to humble yourself and listen to your customers or the audience and be able to read like, okay, what are the opportunities there? And being able to pivot, I think, has been a trend that I've seen for successful people.
Yeah, my answer is going to be very similar. Like once you get past the like actually doing it, like the most cliche is like just do it. The biggest thing that holds people back is never doing it and talking about it. But once they actually get to the point of doing it, it's rate of iteration. Like even as a startup or anything, our chances of finding success are like how fast can we iterate on what we're doing until something clicks. And it's the same thing when you're trying to start up a business or anything. Is like, if you try things at a fast enough rate, it is inevitable you will find something. Ironically enough, I find sometimes this like hustle porn culture of like, working on your idea for like 16 years and never seeing any traction is actually damaging. You should be absolutely willing to be like, wow, no one likes this, I'm going to try something else. And like just doing that rapidly, I think increases the odds of finding success.
Whew. What a way to close us out. Both of those answers were so incredible. Ankur, Jess, thank you both so much for joining me today. I am going to have to re-listen to this one myself. This was so good.
Thanks
so much for having us. It was fun.
That ends our episode of the Independent Business Podcast. Everything that we've discussed today can be found at podcast.honeybook.com. Head to our website for access to show notes, relevant links, and all of the resources that you need to level up. And if you've enjoyed today's episode, be sure to subscribe to the podcast so that you never miss our future content.